Good evening, ladies and gentlemen. Clueless Say Trading Frank again. Today is December 4th, 2016. It's approximately 9:44 p.m. Eastern Standard Time. This is part two of the end of the week, as well as pre next week market forecasts. And I'm running through a bunch of charts, putting in a couple of comments so that all of you are somewhat prepared in what you might expect. So I explained to you very clearly the SPX levels. You don't have to be a rocket scientist. You just have to follow, track the lines and everything that I draw, because that's exactly where the markets are going to go. Period. End of story. Now, one of the other things that that's important is to draw a uptrend line all the way down from the 1800. I'm sorry, the 2000 lows back during Brexit. And in fact, I'm going to go back and look at the beginning of the lows from the beginning of 2016 to give a bigger picture of where the real uptrend line breach might be if we hit a real pothole in the market. So this was your uptrend line till there are two important ones. And I've shown this before, but I want to remind everyone again. So this is one. And the pivot point on that is obviously Brexit right here. Let's do that in blue. Good. So this is the first one. So as you can clearly see here, that this uptrend line, which I will actually, let me change the color so you guys can understand that we have initially, for now, broken that uptrend line. Okay, so let's make this color yellow. So look at that. Focus here. Here's your uptrend line, this one, all the way from the lows, 1800 lows, when they told us that we're going to crash and burn, it's all over, end of the world, the S&P 500 is going to go to 1,000. That's all you heard. You know, most of the gurus and the other forums that I'm not going to name and everything. That was the time of maximum aggression on the long side. It was a double bottom W formation known as Dragon Bullish. Powerful, very powerful. Anyway, so that's done with. So right now we broke that uptrend line on the S&P at around 2204. Right? We're not too far away from that, but we broke it. The second uptrend line that needs to be taken into account is the one that has to be drawn from the Brexit close, not taking into account what happened after hours, and that is at and that line is at 2123. So the bottom line is that if you really look at it, these are the two major powerful uptrend lines that the market cannot breach, and in order to maintain, in my opinion, the multi-year uptrend. So 2120 right here, or 2119.62, and this one on a short-term basis, this is roughly, this uptrend line is, for now, it's at 2208. So it's fine that it broke that. I've shown you the levels that we can come down to reset. The reset is in progress. Reminder right there. You're also seeing a deceleration or of the McClellan oscillator, which got severely overbought back at the plus 85 level. Notice that right before Brexit, we were severely oversold. And I told people straight out, once you get down towards that minus 200 level, it's not time to SOA. It's time to basically get in the market and try to make some money. Once you get up back and get that up a minus 200 to plus 200 type of deal, you are going to see, and this is all mathematical, you are going to see a reset or a pullback in the overall market. Not to say individual sectors. Individual sectors can act very differently, as we can clearly see. So this is it, all right? So this is it. Now let's take a look at the actual E-minis, which are trading now roughly down about 5.5 points on the Renzi Italian referendum win by the opposition parties. So nothing really crazy wrong about this. This is the daily chart. This is a live chart. You can see that it's getting reset. We are close to getting reset. So that's why I'm saying that we could possibly get some weakness first part of the week. I said that repeatedly last week on my real-time Twitter feed, and then you get it spring up maybe towards the latter part of the week, and then the market starts to ease back a little bit right before the Fed meeting. Remember, never forget, the middle of the month, give or take a couple of days, 15th, give or take plus minus 2 or 3 days, is the most volatile period in the market, and that's when the markets generally hit a short-term bottom for the month. It has happened month over month over month. It happened here, okay, sorry, this time is obviously different because of the elections, but it's happened every single time. Middle of the month, you tend to basically make a September. It happened in October, and now we're coming into November. Okay, so every single time you get a pushback, and there are technical reasons behind it. I don't want to get into it right now, where the resets or the lows are hit, give or take plus minus a couple of days at around the 15th. So saying all that, I use, I'm not trying to guess numbers here. I'm using the Darvas box. We obviously have support at the mid Bollinger, which we engaged tonight, as when the markets open, when the futures markets open, and this is exactly what you're seeing. Let me just highlight that. People can see it. Look at that. It hit that mid Bollinger, and then you're starting to see a reversal, a somewhat of a hollow candle reversal. However, things to keep in mind. Okay, things that I noticed. So let me just go back on the daily. And this is not rocket science. This is stuff you all can, you all can do. And I know many of you understand it because you work with me and then you've used your own brain and you see it. One of the things is, if you look at it, this is a consolidation flag. So the bears will say, oh, it's all over, this and that. It is nothing but a consolidation channel. The consolidation channel is where profit takers come in because the smart money that bought the lows are basically saying, you know what, time to take some chips off the table. So saying all that, this is your consolidation channel. We hit the lower end of the consolidation channel, and that's why you're seeing that little mini bounce. Now, if we hit the upper end of that consolidation channel, which is only a few points away, you will, and this, if this consolidation hasn't finished, then you will basically come down again. Okay, and you might be just moving in between this consolidation channel as the profit takers, wither down. Now, consolidation channels become dangerous, as we've seen before, if they completely break down. If we see a large red candle that just breaks straight down and hits the 34 and the 50 moving average on the daily, that's not a good thing. Yes, we will get severely oversold, but that sudden drop, if we see one, should be noted as a major warning sign, period. Okay? Even though it'll be deep oversold, and as long as these lines, by the way, this is the good news, as long as these lines keep on sloping higher, we're fine. Because that means that the 34 and the 50-day moving average and the lower Bollinger and all these things are basically supporting any further drop down. Now, here's the other thing for traders to keep in mind. A lot of people use the 8 or the 9 SMA or EMA. I use the 5 SMA. Okay, right there, this yellow line, this highlighted line. So the 5 SMA is your trader's friend because the 5 SMA is telling you whether or not there is juice for the market to move higher or lower. The 5 SMA has curled down. Nothing that alarming, but it's telling you that over the short-term basis, the trend is lower. So that's why I'm saying the first part of December could be a little bit under pressure, and you need to be quick on taking profits and not leave it to the vagaries like, oh yeah, the real time to buy was around here. No question about it. Now we consolidate and set up for another move higher. That's the way I look at it. That's the way I've played the game, and it's worked tremendously. Right? So the consolidation could be a little bit lower. It could just zigzag down and come down closer to the 50 and the 34-day moving average. If we retest the 34 and the 50-day moving average, I wish I had these those markers that I use. I can't find them today. I don't know where they're hiding, to be honest with you. On the, I don't know, I can't find it. So our bottom line is that if this is moving up, okay, nicely, and this consolidates and this channel consolidates down and touches the 34 and the 50-day moving average, whammo, that's a perfect setup in my opinion for a sharp move higher, where it'll come like this and then break out. Let's see what happens. This has to reset first. Okay, now let me show you a bunch of charts that I look at on the background, and this is just few out of many which are important. Number one is the swing 533. The swing 533 is starting to get oversold. That's a good sign. It was overbought and now it's getting oversold. Look at the stochastics. They are diving down. They're diving down, okay? This full stochastics, the red line and the black line. So till they turn, like I've shown every single time, till they turn, you don't have a buy signal on the swing trade. Once they turn, I've showed it to you guys repeatedly, you get a multi-day rally in between. Intraday volatility, but a multi-day rally. So now they're all diving down. And we have certain levels to keep in mind. The pivot in this case is around 2164, right? This is the SPX. The pivot, this P, is 2165.61. Not bad. I'll take 2167 as a major buy zone and short the market till about then. Pretty decent, right? And I mentioned that last week. Look at the R1. The R1 is the resistance one. The market didn't get close to that level yet. So that's left to be filled. And I think we can get there by the end of the year. S1, which is support, is 2120. You don't want to go to 2120 on the S&P. Okay? You don't want to go there because that's going to really scare the living daylights out of mom and pop who are just starting to feel that the market might go higher and there could be another panic big sell-off. Okay? What you do want to do is retest the pivot on the swing 533 at around 2160 and change, and then move from there. Don't like this. This is decelerating fast. That's your MACD, the MACD, and the MACD, the histograms are decelerating fast. If they start to go negative, this will basically go further down, and we might see again, we might see a 100 to 200 point move, which would be good in my opinion. On the short side, that's what would basically come down. You don't want it to continuously fall because that means the weakness, underlying power of the markets are starting to diminish. So that's it. That's on your S&P 500. Let me show you the next chart, which is the number of stocks above the 50-day moving average, or the S&P bullish percent index, right? So the S&P bullish percent index is basically, look what it's showing. It is starting to top. This was the buy point. This is when everybody gave up, right? So now it's getting overbought. So the BPSPX, or the S&P 500 bullish percentage index, is basically telling you that it is starting to get overbought. So you have to monitor that. This was back after Brexit. See, these charts are looking different than your actual front view of the S&P 500. Here it just went straight up and kept on going. Here, the angle was more of a 45-degree angle, which is good, because Brexit was like a full-scale crash, right? And we came down, but the markets were still kind of holding up there. So this is, I monitor this, because if this starts to come down, that means the overall market rally is starting to fizzle. Third, this is something you guys can all monitor. These are all free. Go to Ticker Sense, Laz Dobrini, terrific, watches money flow, great guy. Has been correct more often than not. November 4th. This was November 4th. Wow. So this is a little bit old, actually. I do apologize. I thought for some reason, I've been tired this week. I thought this was showed December 4th. Anyway, if you see a bullish percentage of 46%, no good. But anyway, that's not updated yet, so I'm not going to go into that. Let's take a look at your let's take a look at the McClellan oscillator. Now, this is important. This is real important. The McClellan oscillator is decelerating rather quickly. So a bull will say, okay, you know, it's a reset. We're coming down. But you know what? Once it starts to decelerate, and here's the pivot on the McClellan oscillator right there. It says P. See that? Falls below that, we could get one of these. Remember, the ultimate buying opportunities, I repeat again, is when the McClellan oscillator goes from minus 40 to, or somewhere in this zone. You guys figure out. Okay, minus 46, minus 55, minus 48, minus 61, minus 75. Wow, minus 75. I showed that repeatedly, that this was a fantastic buying opportunity. Once you get towards those levels, you are inevitably going to get a huge bounce, and we did. And I also talked about in one of my previous broadcasts that we would get up to about 40, 50. Well, guess what? We overshot to 62 on the oscillator. That's some heavy duty move. Okay, this is looking at the New York Stock Exchange overall. Banks and stuff, obviously, did the job. So once you have that, we're dropping rather fast. If we fall below the pivot, then we're going to come down and test this lower Bollinger. These are the Bollinger Bands, these red lines, and those are the support here is minus 61. Buy hands down minus 61. Okay, you're going to get a 2 to 3 day unbelievable rally. That's when everybody's, scared. Nobody's talking in the room. Everyone's like, oh my God, what's going on? Or they wouldn't even say that anymore. They just go silent. That's the time to buy. I would love to see a pullback to at least minus 39 or so on the McClellan oscillator to full-fledged get back into the market, overall increase the long exposure. That's the way you do it, okay? On a behavioral standpoint, you get like all this silence and stuff, no wowzers, nothing. That's the time to really start looking at the indicators and, well, looking at the indicators every day, but that's when you'll see the oscillator is getting oversold. This is not good. It's broken down, right? It's crossed over. The ADX line, the red line is starting to move up. The green line's coming down. So all showing short-term caution. Okay, short-term caution. It turned into big-time caution. Well, I'm there to tell you. So these are the charts overall that I would, I'm just giving you a flavor of what's going on. So that's it, ladies and gentlemen. I will tell you that you guys have been fantastic overall. I think all my rants about checking charts and this and that, many of you are starting to do that, and I think that's a fantastic thing. Many of you are posting charts, which are great, which are very, very helpful. Remember, there is no one single method and no one single person who can tell you what the markets overall are going to do. Forecasting is tough business. I've done a pretty damn good job of it. Trade management is a completely different story. Aside from private ACS sessions, I cannot talk about individual trade management. In the private ACS sessions that I do, as people who have taken it with me, I talk in detail about how trade management can work and how you can slice up your holdings depending on how much money you're trading with. But I cannot do that on a public group session. We need to basically, those are between a member and myself. And full disclosure, this is not about, this is purely financial education. It's not for solicitation or advice. So the bottom line is that, we have to keep it that way. So here's your live picture of the E-minis right here. And starting to see the final thing I'll show you. I only have a minute. This is actually a pretty constructive channel that we're looking at. Wouldn't be surprised if we are up tomorrow. This is what's going to bother the market in a big way, and that's the very sharp move on the US dollar. If you look at it on a weekly basis, this huge cup and handle, this cup breakout, better start to ease back, because the dollar keeps on moving like that. It is not going to be good for corporate earnings, because most of our corporations are selling overseas. So large corporations. So this is somewhat worrisome. If it creates a small handle and breaks out again, watch out. No good. The final thing that I'll show everyone is the 10-year bond, which I did show, is starting to move up rather rapidly. If it comes close to this 3% level, I'll tell you, we're going to get a real rate tantrum. The market's not going to like it at all. So we need to start